Welcome to Sam's Summaries. This episode is a deep dive discussion into Sam Fury's summary of Chapter 1 from the book How to Swing Trade by Brian Pezim. It has been created with the help of AI. The chapter is titled Introduction. You can read the original post at samfury.com.
Hey everyone, welcome back. Ready to dive deep into some more fascinating trading knowledge?
Always ready to explore.
Awesome. So today we're tackling swing trading. Specifically, we're going to break down Chapter 1 of How to Swing Trade by Brian Pezim.
Great choice. This chapter really lays a solid foundation.
Yeah, it does. For anyone who's maybe heard the term swing trading but isn't exactly sure what it entails, well, this is for you.
Absolutely. It's kind of like finding that sweet spot between day trading and long-term investing. You're holding positions not for minutes like a day trader, but also not for years like a long-term investor.
Right, we're talking days, weeks, aiming to profit from those price swings that happen on those timescales.
Exactly. So it could be a good fit for people who want to be more active than a buy and hold investor, but don't have the time or the stomach for the intensity of day trading.
Totally. And I think one of the things that draws people to swing trading is this idea of, making some quick profits.
Yeah, it's definitely appealing on the surface, right?
It is. But one thing that I really appreciate about Pezim is that he doesn't shy away from busting that easy money myth.
Oh, absolutely. He's very upfront about that. Swing trading, like any form of trading, takes work, dedication, and a willingness to learn. And I think that's important to emphasize right from the get-go.
Yeah, because it's easy to get caught up in those stories you see online, of people making a killing in the market.
Oh, for sure.
But the reality is that it's much more complex than that.
Right. And it's not just about making profits, it's about keeping them too, right?
Exactly. That's the real challenge, isn't it?
Yeah. And Pezim makes a great point about this. He says that even in a bull market, when prices are generally going up, it's surprisingly easy to lose money.
Oh, yeah. You get caught up in the excitement and make impulsive decisions.
Totally. You think everything's going to keep going up forever, but markets are cyclical and things can turn around pretty quickly.
They can. So Pezim lays out several key ingredients that he believes are essential for success in swing trading.
Right, like having the right tools. And that's not just about having a fancy trading platform. It's about having access to real-time data, charting software, and I'd say a reliable internet connection.
Yeah.
But it's also about the internal stuff, having the motivation to learn, to stick with your plan, even when things get tough.
Yeah, that discipline is key.
Yeah.
You need a plan, a trading plan that outlines your entry and exit points, your risk management strategy, everything.
Absolutely. And you got to be adaptable too, right? Because markets are always changing and you have to be able to adjust your strategies accordingly.
So true.
And I think one of the most important things Pezim emphasizes is treating trading like a business.
Oh, that's such a powerful analogy, isn't it?
It is, because if you're serious about making consistent income from trading, you can't approach it like gambling.
Yeah, you can't just be placing random bets hoping for the best.
Right. You need a solid plan, a clear understanding of your goals, and a strategy for managing your risk.
You wouldn't open a store without a business plan, right?
Exactly.
So, speaking of risk management, Pezim highlights two key rules that I think every trader, not just swing traders, should know.
Yeah, these are fundamental. The first is the 1.2 risk-reward ratio. This means you should only enter trades where your potential profit is at least twice as big as your potential loss.
Makes sense.
So if you're risking $100 on a trade, you aim for a profit of at least $200.
Right, so your wins outweigh your losses.
Exactly. The second rule is the 2% rule. And this one's all about preserving your capital, which is like the lifeline of your trading journey.
For sure.
The 2% rule states that you should never risk more than 2% of your total trading capital on a single trade.
That's a good way to protect yourself, right? So you don't lose everything on a single bad trade.
Exactly. It's about long-term survival in the market. And, Pezim also talks about the importance of keeping a trading journal.
Yeah. I have to admit, I used to think journaling was a bit much.
I get that. It can seem kind of tedious, right?
Yeah, but the way Pezim describes it, it's not just about tracking your wins and losses. It's about really understanding why you made the trades you did,
Yeah.
what your thought process was, what works, what didn't.
Absolutely. It's about self-reflection and continuous improvement.
Right. And he ties it back to emotional control, which I think is so important in trading.
Oh, it's huge. Because when you're trading, it's easy to get swept up in fear and greed.
Cool. You see a big green candle, you're like, I got to get in on that. or a big red candle, and you panic sell.
Exactly. But the trading journal helps you to step back and analyze your decisions more objectively. It's like having a mirror that reflects your trading habits, showing you patterns you might not even realize you have.
Yeah, it's like having that accountability partner, even though it's just you and your journal.
Right. It helps you identify those emotional triggers that might be leading to bad decisions.
So, in a nutshell, swing trading is a strategic approach to trading that requires planning, discipline, and a solid understanding of risk management.
It's not a magic bullet, but it can be a very rewarding way to participate in the markets.
And as you start exploring swing trading further, think about this. If you were to create a business plan for your swing trading journey, what would it look like? What are your goals? What's your risk tolerance? How much time and effort are you willing to invest?
Because ultimately, swing trading, like any business, requires a commitment to learning, adapting, and constantly improving.
That's a great note to end on. So whether this deep dive has sparked your interest in swing trading or maybe confirmed that it's not for you, congrats on taking the time to learn something new.
Knowledge is power, after all.
Exactly. Until next time, happy trading, everyone.
Thanks for tuning in to Sam's Summaries. If you found this episode useful, let us know with a like, follow, and share. Also, if you haven't already, be sure to visit samfury.com to get free access to all of Sam's original summaries. You can also get any of Sam's books and other exclusive content. It's all completely free at samfury.com.